Yeah, I'm losing my edge.
Futures trading sustainable? Something that comes up fairly often, especially you and I run a lot of the social interaction with the small exchange and our YouTube channel and stuff like that. And mostly, this is how it goes. There's like 90 to 95% positive feedback, especially when it comes to small exchange or similar firms where it's like, we got these products. We're not necessarily trying to sell you anything, but we're just giving you a ton of free educational content. We give these people free educational content every day, but there are those 5% of people who, for whatever reason, come in to throw different snipes at you like, oh, well, did you know that 95% of futures traders are unsuccessful and blah, blah, blah. And they're usually unfounded arguments coming from, someone who maybe was spurned by futures trading. The reason why small exchanges here is to, fill in the gaps of past futures products. And you could definitely get burned by those traditional products that were too large. And so I can understand where some of the resentment might lie. But I wanted to jump on with you here today, Mikey, to go straight at that question of the sustainability of futures trading, because I think a lot of those numbers that are either built off of studies done years and years ago, or are built off of nothing. I don't know if you know this, Mikey, but on the internet, you can literally say anything, and people can believe it or not. I wanted to crunch some numbers here, talk about fees and commissions and likelihoods of a certain trade working out in your favor, and come to a conclusion on whether or not this trading is sustainable. Because you see this stuff on social all the time, right? Where like day traders, it's unsustainable. Trading single stocks, trading futures, only a small number there can do it sustainably. What say you on the topic?
Yeah, sustainability is certainly an interesting topic these days, environmentally and financially, when it comes to trading. And I think you make a great point, Frank. One of the biggest reasons for mistaking an account is just getting too big. Yeah. And the traditional futures products for so long were huge, and we're trying to make trading more sustainable with smaller size, increasing those number of occurrences, being able to create a fully diversified portfolio. And I think smalls really enable you to do that. And I'm excited for the discussion today, because I think a lot of people overlook fees in their trading, but they can play a very big role in how sustainable you are as a trader.
Yeah, absolutely. And I'm glad you hit on a couple of key words that I want to use throughout today's segment, which is, small trading, which that is really key to sustainability. Anybody who's followed Tasty Trade or similar, educational content knows that the name of the game is trading small, and not trading, if anything, too small as opposed to too big, so that you can stay in the game longer. And if you have a theoretical edge, something that's a 50-50 trade that actually is 60-40 or even 55-45, you need to be around long enough for those probabilities to play out in the long term. And I think where futures trading becomes unsustainable is when you do get too big. So I want to zero in on an example from this week of small trading, small opportunities, and then rope in commissions and fees and see where these even small opportunities can get unsustainable at a point. I want to look at the small treasury move this week because it doesn't look like much, Mikey. Just a small blip there. But this is something that the small exchange has really tried to capitalize, is the opportunity in something that is a $50 move. That $50 is still a really decent scalp, especially when it elapses over the course of 24 to 48 hours on a product that from our side is margined at less than $200. That's a great little return, a great little opportunity that, using those traditional futures or traditional strategies from big traders in the 80s, 90s, and early aughts, they would look at an opportunity like this, Mikey, and just completely do away with it, not even think about trading it.
Yeah, I mean, you added that margin piece in there as well. I mean, the potential return on capital, 25%, is significant. The fact that you could only get that before if you had, a minimum margin of $5,000 is just a little bit ridiculous. Today, it's available to most traders for, like you said, $200 to get into that trade. And when it comes to the consistency and being able to have capital to deploy for these opportunities, if you're not stretched too thin across just 2 or 3 products and you leave some cash on the side, or you're trading smaller futures, you can very easily get in and out of these positions, and they make themselves available on the market every day, whether it's in interest rates like we're looking at today, or we've seen also some really great bounces in the US dollar product, which is moving around a similar amount, precious metals and equities.
Yeah, absolutely. Not unique to the interest rate asset class and not unique to the S10Y product. This is the type of stuff that all of our products are modeled off of. We always go back to the, $100 is a good approximation for a day in the life of the smalls. And why do we do that? Well, we do that because we designed the products so that you can take advantage of small opportunities like this relative to an efficient margin. But I want to get to a different cost outside of margin. I'm glad we hit on that piece today, but I want to zero in on commissions and fee structures, because this is what can really make or break the sustainability of a strategy in futures markets, Mikey. And this is something that a lot of platforms have gotten really competitive with. And I want to quote a couple of platforms here in a second, just to show you, how the small exchange products are working to even get under that $1 at places like Tastyworks. I was just sizing up an S10Y trade earlier today, and Tastyworks, Mikey, the commissions and fees all in are about 50 cents for that trade. That's about as low as it gets for any futures market, any platform there, because once you start getting up to $1, $5, $10, which is what as recent as like 5 years ago, commissions and fees all in on a futures trade could cost you about $10, which seems insane here in 2021. That's when the sustainability really starts to move away. Once you have to start being, 5% more correct than the theoretical there just to break even, Mikey, sustainability goes out the window.
Yeah, exactly. And consistency too, right? I mean, you want to be able to trade any opportunity you can. You shouldn't be worried about having to pay $10 or $20 round turn, being so much more selective in your trades, because it just adds up. For me, it doesn't make sense to trade once a year or once a month. You talk about creating a small edge, something where you're maybe 51 or 55% in your favor. That's really going to help you if you can put on many occurrences, and a $10 fee is going to dig into your profits at the end of the year when you're doing kind of your calculations. And fortunately for Tastyworks customers, there's no market data fee. But if you're at another shop, you may be paying market data for futures access. It's another huge cost to consider. It's like slippage. I think it should always be kind of looked at holistically when you're putting on these trades.
Absolutely. And this is, I want to now key in on the fact that I'm looking at these percentages are all relative to a $50 trade, just like we showed you in S10Y. And this is why, the fee structure from the small exchange is so small, because, we want people to be able to take advantage of $50 trades. Mikey, we want them to even take advantage of $20 trades, stuff that once again, just like was totally written off by professional and retail traders as recently as just a couple of years ago, where it's like, oh, if you're looking for $20, $30, $40 in a futures trade, you're in the wrong markets, and there's nothing you can build that leads to long-term sustainable success there. And even a $1 commission and fees all in, Mikey, for a futures trade makes me have to gain more than 1% in edge to have a profitable bottom line at the end of the week, month, or year there. And like I just alluded to with Tastyworks and even some other platforms, I know a lot of Canadian viewers are trading on IBKR waiting for Tastyworks, and some of these other brokerages and platforms, Mikey, have very low commission structures for the small exchange products. From our exchange side, we put them as low as we can while still keeping the lights on here. And I think between those two examples there, our commissions and fees all in are sitting around 50 cents, which means that you don't even need that full percentage in your favor to start seeing profits with your futures trading. And I think this is a big part of what people talk about with, only 5, 10, 15% of futures traders are successful. And that's because historically that $5 or $10 commission and fee structure per futures trade, Mikey, that just grinds you away if you're getting, 50-50 or 51%, 52% in your favor. You're still losing out at the end of the month or year or couple of years. And that's why it isn't sustainable from that standpoint. But such great work from some of these platforms and brokerages and from our side to toot our own horns to get those commissions and fees all in under $1.
Yeah, definitely. And you'll see if you trade different products, the fees are going to differ. Whether you're trading micros, minis, crude, gold, small exchange, every fee is going to be a little bit different. We've done everything we can to be the lowest exchange fee futures exchange in the world. So enabling you to put on these smaller positions, be a little more consistent, manage more precisely. And you also have the flexibility if you want to scale up and look for this similar return on capital, but with more contracts, you can do so very easily.
Well, here is, the two directions this could go, Mikey, with futures trading and sustainability is you could have commissions and fees on a per trade basis that are so competitive as they are from the small exchange and some of these partners that put our products out like Tastyworks and IBKR, or you have to increase this dollar amount that you're looking for, Mikey, on a per trade basis. And that has the indirect effect of creating unsustainability from the volatility of your return side. So what I'm saying here is if you're trading the smalls on some of these competitive commission platforms and brokerages, it's just a matter of taking whatever strategy and even small trades of $20 or $30 and getting that slight edge to create long-term success. Because the other end of the spectrum, which is, I think, the most unsustainable form of futures trading, is saying, oh, well, my commissions and fees are actually $2 or $3 or even $5 and $10 in some places. So now I need to make $500 per trade or $1,000 per trade. And now if you have a couple of those trades go against you, a lot of these traders' accounts can't take that with those big traditional futures. And so thankfully, we feel like we've created an ecosystem here at the Small Exchange whereby you have the low exchange transaction fees, you have no market data fees at the moment. And so you can just gain 1 or 2% in your favor and trade sustainably.